A very good afternoon, everyone. My name is Umang Vats, and on the behalf of PRB Academy and Indian Institute of Banking and Finance, I welcome you all to this webinar on getting started with impact management. For those of you who don't know what PRB Academy is, it is a global training program developed by United Nations Environment Program Finance Initiative, UNEP-FI, German Agency for International Cooperation, GIZ, and Chartered Bankers Institute to help finance professionals navigate the sustainability landscape. For the next 70 to 75 minutes, we have an amazing set of speaker lineup for you. Let me just share that with you and also the agenda for today. I hope my screen is visible.
Yes.
Perfect. So we have an amazing set of speaker lineup for you. And to give you a very quick overview of the agenda that we have planned for you. So we'll be starting with opening remarks by Mr. Das, followed by joint capacity building initiatives in India, a very quick overview by Maria from UNEP-FI and Ranjan from GIZ, followed by a session on how to get started with impact management for banks by Kareen from UNEP-FI, followed by a peer learning session by Anujan from Golem Bank, followed by the concluding session by Valerie from CBI on impact management module. Without further ado, I would like to welcome Mr. Das to get this webinar started. Over to you, Mr. Das.
Good afternoon, everybody. The esteemed speakers for today's webinar, all the participants. It is a very important webinar today. Topic is the impact management for Indian banks. If you see this year's UN climate talks were a letdown, but enterprises must do what is needed on their own interest. The banks should do what is needed on their own interest. For India, this matters even more. The country faces a climate crisis that will not wait for the global agreement. The performance rating of India has dropped from 10 to 23. The climate score is also down in 2025, and India is second or the third most affected by climate change in particularly three areas. One is the total fatalities, total affected persons, and the economic losses. This warrants all the bankers to think twice before doing anything with the corporates who are not adhering to the norms of climate risks. And COP30 proved that summits cannot move at the speed that the climate requires. The calculus is simple. Climate impacts will accelerate, regulatory costs will rise, supply chains will fracture. Companies that build resilience now can reduce those costs. They can secure their assets and help protect markets. So that is more important for the banks when India wants to become Vikasit by 2047 by large-scale credit to the corporates and for the energy efficiency also. However, a lot of things need to be done now, and it still needs to build the resilience into the economy at a scale. To that effect, this webinar will be an eye-opener for the bankers who have joined today this webinar to know the impact management for Indian banks on behalf of the climate risk. And a lot of speakers will be deliberating on this topic today. And I hand over to Maria to take it forward from here.
Thank you so much, Mr. Das. Thank you for hosting us in this for this event. It's a pleasure to meet you. I hope we're gonna meet again in person. And I say good afternoon for everyone that joined us in this webinar that could be about impact management for Indian banks. Let me introduce myself. My name is Maria Taborda. I oversee the regional coordination and membership at UNEP-FI. As you may already know, UNEP-FI is a collaboration between UN and the financial system, and we have been supporting banks and insurance to navigate the sustainability challenges for the last 30 years. As Umang said in the beginning, we have the PRB Academy, a partnership with IIBF, Chartered Banker Institute, and GIZ. So it's really a joint initiative to scale up sustainable finance training for banking professionals. So this collaboration has been instrumental and is making this event today possible. So thank you for your commitment and being today with us. We have a big ambition for this program. We would like to train thousands and thousands of banking professionals in partnership with IIBF in India. We have courses about getting it started, responsible banking for C-level, client and customers, climate, nature. So I hope you enjoyed today the course, this teaser, let me put like this, on impact management, and spread the news and invite your colleagues, present to the educational department, and we really hope that the PRP Academy with the IIBF be part of your educational platform and part of the responsible banking community, and we could really train thousands of people. In India, as Mr. Das said, is really stands in a critical moment in fight, not only India, but all over the world, but against climate change, biodiversity loss, plastic pollution, and India has over 1 billion of people, is a global economic powerhouse. So it can drive growth, it can drive innovation, and we understand that this agenda of responsible banking is also key to push this agenda. This is not a distant concern. This is here, this is now. So we have been seeing the rising of sea levels, the extreme weather events, the ocean acidification, the glacier retreat. There are very realities that are impacting our infrastructures, displacing our communities, and threatening our livelihoods. So we need to stop the biodiversity loss. We need to stop deforestation, land degradation, when we look water. So it's a big challenge. And what I would like to say, these are not just social or environmental challenges. These are financial challenges. They are financial risks because they affect credit risk, operational risk, reputational risk, and ultimately systemic stability. So financial institutions, they need to understand the positive and negative impacts of its portfolios, and this is the topic of today, and try to address through the products, through the services they have. When we look from abroad, we can see that in India, there is a momentum. We see how the Reserve Bank of India had released the draft guidelines for climate disclosure. We see the Ministry of Finance introducing a draft of climate finance taxonomy, and more investors aligning portfolio with ESG principles. So this is a movement that is happening globally, but also we are very happy to see how it's happening in India. And as UNEP-FI, we really want to support this transition. UNEP-FI has a huge presence in Asia Pacific. We have more than 110 members across 15 countries, and they are all signatories, or almost all of them signatories of the Principles for Responsible Banking. And of course, we welcome the Indian banks to join this initiative. We have been working in India for, I think, 2-3 years. We had conducted in-person workshops also with IIBF, workshops for board of members, CEOs, senior risk professionals, and we had more than 100 banking professionals working with us. We also supported the RBI in strengthening their capacities to manage climate risks. So we had some capacity building sessions, and we also developed a handbook of best practices for climate risk assessment. So today is the invitation for the PRB Academy, but also for the Principles for Responsible Banking. This is not a reporting framework. This is a market readiness framework that should support in your regulations, but also to see as a strategic framework. It should help us on the robust foundation for long-term sustainability strategy, helping Indian banks to lead and in this global transition to responsible banking. So what does leadership looks like today? It means moving beyond compliance. It means embedding sustainability into strategy. It means shifting from risk management to opportunity creation. So we already see a lot of results. Last month, we launched a progress report, and we see that our signatories are performing better than the average, and also their cost of capital is also lower than the peers that are not part of our initiative. So I invite the Indian financial institutions to embrace sustainability, to use the responsible banking as a framework to build resilience against climate and nature risk, to unlock new growth opportunities in green finance, and to position yourself as global leaders in responsible banking. So as I mentioned today, this session will be about impact management. This is a very important step for responsible banking. Banks need to understand positive and negative impacts of its portfolio, so in line with what is material for your business. So we salute the banks who are already at the forefront of this journey in India and invite you to join us in this building resilience and accelerating sustainability in finance. I hope you enjoy, and I wish you all a good event. And I turn over to Ranjin.
Thank you. Good afternoon, everyone. It's really a privilege to speak with you here today. So my name is Ranjin Fernando. I'm advisor at GIZ. I'm based in Germany. For those who may not be familiar with GIZ, we are a German public benefit federal enterprise. We are the main agency for technical cooperation of Germany. We work in more than 120 countries with governments, private sector entities, and the civil society to promote sustainable development. In India, GIZ works across many sectors, but I want to highlight maybe three things that we do in the financial sector. Since 2020, we've been implementing the CAFRI program. It's the short form for climate adaptation and finance in rural India. Here we work very closely with NABARD to integrate climate change adaptation into selected funds of NABARD. Number two, since beginning of this year, we've launched in India a bank advisory program. So this is much more than just capacity building. Here we really bring local and international experts to support financial institutions over a period of several months. And this technical assistance is really based on the individual needs of the financial institutions. Currently, we're providing the support to, for example, Union Bank, Axis Bank, Equitas Small Finance Bank. We're about to start supporting IndusInd Bank. One financial institutions we are supporting, for example, to identify opportunities for low carbon cement and steel investments. Another one we are supporting to create loan products for climate smart agriculture technologies. Yet another one we are supporting to assess climate risks and integrating this into credit risk procedures. So some real practical examples of what sustainability and responsible banking can mean. And as Maria already mentioned, we've been working with our PIB Academy partners, UNEP-FI and Chartered Banker, in very close cooperation with IIBF to deliver training to bankers in different parts of India. And we continue to develop the Academy further by developing new training content. So in this webinar today, you will hear more about the upcoming training course on impact management. And I hope this new training course and this webinar will be very useful to you. I'm looking forward to spend the rest of this hour with you here today, and thank you for your attention.
Thank you so much, Ranjan. Thank you so much, Mr. Das. Thank you, Maro. Over to you, Kareen, to get the next session started.
You're muted.
Thank you so much. Apologies for the mute. Thank you very much again for the opportunity to be with you today and for hosting us, Mr. Das. So I am Karine Ab within UNEP-FI. I head up our impact facility. So this is the facility in charge of UNEP-FI's overall approach and methodology for impact management. And so it's my privilege to give a little bit of a teaser, as Mara was saying earlier on what that means and how that works, as a bit of an introduction for what you can expect to see in the new PRB Academy materials going forward. And so I'll basically be clarifying a little bit what impact management is and why that's relevant for banks and in the Indian context, and then giving a bit of a methodological introduction. So if I could have the first slide. Thank you. So first off, just some basics so that we're all on the same page. I'm referring here to material that's been defined not just by UNEP-FI, but by a wide array of sustainability initiatives that are gathered under a collective called the Impact Management Platform. We're very aware that banks are obviously exchanging with many different sustainability initiatives, whether it's reporting frameworks like GRI, whether it's very specialized entities on specific sustainability topics. And so at UNEP-FI, really, we're trying to put forward all of our work in a way that is very much connected to all these sustainability initiatives. And so as part of that, we're really using the work coming out of this collective as our, very much our starting point and our anchor. And so as per the definitions that you can find directly on the website of this collective of the Impact Management Platform. So what do we mean by impact? So we're talking about the effects of the organization on people and on the natural environment. If we talk impact management, that's the process by which the organization understands those impacts, acts on them, and manages them, ultimately to achieve sustainability and increased well-being, but very importantly, as part of optimizing company risk and opportunity management. And if we go to the next slide, it's very important to reiterate that link effectively between impact and risk. This was evoked a little bit already earlier on. So this is not an isolated concern. It's really integral to business logic. So while we might think about risk management and impact management potentially looking at different things, they're actually more on a continuum. So effectively, if you're looking at your impact, yes, you're looking on the impact of the organization on the outside world, sometimes referred to as inside out, whereas risk management is more about looking at how the outside affects the company. But because your impacts on people and planet and of your clients on people and planet actually are the source of some of those risks to you as a bank, these are on a continuum. And perhaps if you can click a couple of times more, Umang, effectively what that is showing is that the financial materiality of impacts is dynamic. So you might not immediately see some of those impacts on people and planet translating back into risk, depending on whether it's immediate, whether there's reputational risk or regulatory risk associated to it, but it all builds up into systemic risk, which was also evoked earlier on. So it's very much the two things are on a continuum. And if I have one last click, effectively the best way to look at this is that risk and impact management are mutually reinforcing. And so if we move on, the logic here is that impact management is really something that is relevant to all types of organization. It doesn't really matter how much of sustainability considerations are at the center of the company vision and strategy. You can see again, here drawing from what we've done with all of our peers and other sustainability initiatives. We've kind of drawn out, three typologies of organizations, from those that are very focused on sustainability and have that at the center of their mission. That's the top case. those that are, trying to operate within environmental and social boundaries, finding that balance, and those that, may not really have sustainability even part of, that purpose or vision, or trying to achieve that balance. Irrespective of which of those, cases an organization might be in, there is a relevance of impact analysis, understanding impacts, and having some degree of management of those impacts because of that link precisely between impact and risk. So that's a little bit of the backdrop. If we move on to the next slide, trying to bring this now a little bit into the Indian context. So the thing also about impact management is that it's, because of that logic of understanding what the impacts are on the outside world as a way of better understanding associated risks and opportunities from a business perspective, it means taking a holistic approach. Holistic meaning you need to think about environmental, social, socioeconomic concerns. And so what we've seen is a huge growth, of course, in the Indian context of the policy and regulation that is building up with the taxonomy, some of the disclosures. A lot of that has had to do with climate change, and what you're seeing there, that diagram, that is something at UNEP-FI that we call our impact radar. It's basically the collection of sustainability issues, environmental in green, social in pink, and then socioeconomic in purple. And so as you can see, climate is one of many topics. It's obviously connected to a lot of the other topics, but there are many others. And regulation and policy in India is also starting to look into a few other areas. And if we move into the next next slide, what we see also, if we take a little bit of a scan of the Indian context, a lot of the topics, and you recognize a little bit the listing from the previous slide, are actually areas where there are needs, where there are priorities in India, just from the perspective of where things are at with different subjects. And so this is increasingly, also reflected in some of the regulation where we're moving into biodiversity, housing. Some of these topics are coming in. And because they're all interconnected, it's important to have that sort of, scan that enables you to look across everything else. Why? Because that's going to enable you also to really tailor and focus your attention where it makes most sense, most business sense, based on the composition of your portfolio, the kinds of clients that you have, whereabouts they're operating. Of course, some topics like climate change, they are cross-cutting, but they don't affect everybody in quite the same way. And it will be different combinations of topics that are the most relevant and the most material to you. So this is really I'd say, one of the strategic elements of impact management, and why, it's also relevant in India, where there's a variety of different topics that require attention. So moving on from here, a final point on, this relevance of impact management. As you start to broaden out the perspective and try to look across environmental, social, and socioeconomic issues, you will start to see, okay, there are many different issues. As a bank, more often than not, you're tending to many sectors of the economy, many different players, from small businesses to individuals to large companies. And so many topics will in some shape or form be associated to your portfolio, and yet you need some way of rationalizing and prioritizing. And having this holistic view is really important because it enables you to also think about strategically about, okay, which topics are interconnected. That's what we call at UNEP-FI interlinkages. So the notion of interlinkage is, okay, if I take action on sustainability topic A, how is that going to potentially have also positive benefits on other topics that also require attention? And as a result, where is it strategic to focus attention and make a priority? What I'm projecting here on screen is two examples of topics that have a very big amount of interlinkages. So healthy economies, circularity, these are two topics that are in that overall impact rate that I showed earlier on of all the sustainability issues. And you can see that action on these really enables a lot of different areas to be addressed. So circularity hits on a lot of different sustainability issues, including things such as climate change mitigation, such as pollution, such as biodiversity. conservation. So it's this is part of explaining the holistic approach and how that really enables things to be more strategic. At this point, I'd like to transition into that other part of what I was going to show you, which is that introduction to the actual practice of impact management, hopefully having made a little bit of an explanation of what that is. Again, here I'm pointing you to the work that we have done collectively at UNEP-FI with other sustainability initiatives, and some of which I'm sure many of you are working with or using, also their networks. And this really sort of outlines what are the different steps of impact management. So you can see running around the middle, you can see the animation, the elements going in red. There's a step such as identifying relevant topics, measuring and assessing your current performance, establishing action plans, targets where relevant, implementing that, monitoring, communicating on it. But so what's important to point here is you've got a number of steps that are really reminiscent of any management system. And what you're seeing is in the middle, you see strategy and governance, essentially because governance obviously is, what will enable to collect this together, but strategy is the key word here. This is really something that is going to enable you to feed into company strategy and understand, a positioning for the company of, which sustainability issues are going to be, material to you either from a risk perspective, but also from an opportunity perspective and where there might be growth opportunities. If we take that into a specific banking context, because what we're looking at now is the overall general notion of impact management. If we go to the next slide, you will see how that translates into banking through the Principles for Responsible Banking frameworks that we hold at UNEP-FI for the banking community. What you're looking at is the PRB journey, where there's, as you can see, that logic of you assess, you understand, you set up a strategy, and then you deliver across 4 action categories in blue there that are the bespoke levers of banks when it comes to sustainability issues. Policies and processes, your portfolio composition, your engagement with clients, and then other types of engagements, advocacy, and partnerships. And so this is really what we want to home into is impact management, but specifically in the context of banking. And so at UNEP-FI, what we have is a dedicated methodology and protocol and suite of resources that enables you to take that into effect. For PRB members, that enables them to respond to the requirements of the principles. But this is overall a methodology for banks. And so if we look at the next slide, please. Wanting to point you to effectively the methodology for that is captured in UNEP-FI's impact protocol. That's basically a 5-step process that enables you to understand and manage positive and negative impacts. So that's available online. I believe this deck will be made available with some of these links. But in any case, now I'd really like to spend a little bit of time just walking you through the 5 steps to give you a sense of that basically application of impact management in a banking context. So 5 steps, and this will be reminiscent of management processes you might have seen elsewhere for other topics. It will be reminiscent also of certain frameworks such as the GRI, but also others, and that is purposefully so. The idea is not to reinvent, but to adapt and make more efficient and really make this banking specific. So first of all, scoping. That is a step of understanding what the core business activities. So I'm still speaking to the first item, so hold on a minute for looking at element 2. The first step on scoping is the really taking the time to unpack the core business activities. So what are the main portfolios? What are the main business lines? Is it consumer banking? Is it retail banking? Is it institutional and corporate banking? Whereabouts is it happening? Is it happening in some parts of India? Is it happening all of India? Is it happening internationally? If internationally, what are the key markets? So it's that connection of understanding the business activities and where it's happening. So that you're able to also understand which are the parts of the business that will also require potentially prioritization if one is not able to immediately look at the whole portfolio. The second step is really to work on this impact identification. And so you can see 3 boxes here. So there's 3 important things here. First of all, this link again to business activities and geographical context. If we're going to do impact management, we need to understand what is the context in which that is happening. So if we're looking at the potential impacts of the portfolio through the clients of the bank, then it needs to be contextualized in terms of what is the sustainability situation and the sustainability needs in the geographies where this is happening. So that's why you see in the first box, understand context. So again, this will be dependent on the scope of the portfolio and where the clients are. So it might be at a country, a local, or a global level. But it's understanding which topics basically are in the most critical state, which are the topics that need attention based on statistical data. It's being aware also of some of the policy and regulatory priorities, and it's also getting a sense of what are the trends. Is the situation dire on, let's say, for instance, water availability, and is it getting worse, or is it critical but it's already managed, right? Just to take an example. So that is one element. The second element is this, going back to the business and say, okay, what is the composition of the portfolio? If you've identified, the main business lines, say that we have one on consumer banking and we have another that's business banking for sort of middle market clients. What are the associated impacts? So that means really being able to understand what are the sectors that are within the portfolio and the size of the organizations, and against that to be able to plot what are the main topics that come up. The third step is basically to bring the first 2 boxes together. So what are basically the topics associated to my portfolio, and how does that compare to the needs, the sustainability needs on the ground? You cross that data to start a first level of prioritization. I see that step 3 has been brought up on the screen. That is, the third step in the impact protocol itself. We talk about performance measurement and assessment. So we've had a first notion of what are the associated topics to the portfolio, and how they relate to the context. That's hopefully given us a few key pointers of where to focus attention. We then have a look at the reality of what's already happening inside the bank. And so you see again here, this is divided in 2 parts. Basically, practice and impact are the 2 key words here. So the practice is basically to see, if we think again about what are the core levers for banks, what is the status of, the usage of those levers as we stand relative to the topics that were previously identified. So the levers being policies and processes. So are these topics reflected, captured in things like KYC, in due diligence processes if they're in place in the bank? Are they part of some of the, sustainable or green finance departments? Are they part of, some of the standard processes within the bank? If we look at the current portfolio composition, how exactly how well are we doing, or what is the trend going forward that we can expect to increase or reduce the positive and negative impacts on the topics that were identified? Client engagement, has that have these topics been embedded in client engagement? Which are the key clients to maybe start reaching out? Advocacy and partnerships. This is the acknowledgement that not these impacts they're indirect for the bank, and so they depend partly on yourselves, but they are also addressing the topics is also going to be something that needs to come from other players, whether that's government players, whether it's policy and regulation, or other sources. And so understanding how to interact with these other players, so that you obviously need to do your fair share, but there needs to be collaboration with other players with equal responsibility on these topics as well. The impact side of this is to see what do you already know in terms of your current impact footprint. So more often than not, that might be limited to certain topics. It may not be information that you have for all topics, but that is what you would be looking at as well in order to understand, okay, where do I stand today in terms of actually managing these topics that I've identified as being, connected to my portfolio. Moving on from there, that is when you can really start to establish an action plan and set targets, establish KPIs that can then be followed through. So it's like doing a further level of granularity in some ways. You can see a number of boxes. So first off, reconsidering what are the specific, let's say, targets or objectives that are worthwhile pursuing. So current policy and regulation can be one place to look at so that you know what the objective is, what you would be ideally looking towards. Reconfirming relative to that standard, what is your current baseline? So again, going a little bit deeper than you did in the previous step, and then really establishing a set of KPIs, creating an action plan for each of these action categories, right? For the policies and processes, for the portfolio composition, for client engagement, for internal, for advocacy and partnerships that are together with a number of clear KPIs, and where you might have established also some targets. Some of those targets may be publicly disclosed, others may be internal, but it's that notion of understanding what's going to be done by who and with what KPIs. And then finally, this is really coming full circle. It's the monitoring over time of your practice, of your impacts, so that you can effectively improve over time. This could have been put into a circular format, as you saw on the previous slides as well, in the sense that it's always iterative. You need to regularly reconduct an assessment because the context might have changed, your portfolio composition and your business might have changed, might have grown, you might have developed a new area of business, etc. So those are the 5 steps. I'm going to wrap up with just a few final, let's say, concrete illustrations of the sort of data that you would get out of performing, impact management, and the early steps of that, where you're doing, a portfolio analysis and doing, that identification and assessment part. So what you're getting out is, you're identifying key topics and exposures. So what are the different, what you're seeing on these spider charts are different sustainability issues, and you're looking at, okay, what are the positives and what are the negative associations in blue and orange respectively. You're getting, dots around the circle where you're like relating that to where there are actual deep sustainability needs in the country. So this is the sort of things that, would emerge. It's the sort of business intelligence that you would get from this exercise. The next slide shows a further illustration. If you go deeper, as you're mapping your portfolio, you can literally see 4 different topics, which are the sectors inside the portfolio that are, driving basically this connection between you and the sustainability topic and how big your exposures are basically. So that helps you to identify, the key sectors within the key sectors, the key clients that you're going to want to consider, engaging with or having policies around, etc. Final illustration of the process so that you can get a sense of the sort of outputs as well. So literally what you're seeing here is a super summary of kind of an action plan or table that illustrates that, where you see the 4 action categories with portfolio composition, client engagement, policies and processes, advocacy, where you see the specific indicators that you might have identified for these action categories, what your targets are, understanding who's responsible, and over time, who's what the results are. And you can see there's 2 tables, one for practice, one for impact, because what's very important is, while you need to get as close as possible to measuring end impacts, what is driving the change and what is improving the positive impacts and the reduction of negative impacts is the practice that sits behind it. It's these 4 action categories, and that's what needs to be monitored very, very closely. So that's almost it. Just want to point to sort of the ecosystem of resources that we have for impact management. So you can see that there's a number of things. The impact protocol sits at the top. That's what I've very, very quickly walked you through. But there's a number of reference materials. There's a sector to impact map. There's a needs mapping. There's interlinkages mappings. There's then a series of interactive tools where you can basically collect your portfolio data and match them with these mappings and get some visualizations and help you along your analytics and your planning purposes. You can see a vertical blue box. That's a series of guidances that go sustainability topic by sustainability topic to identify relevant indicators that you would be looking at. And then finally, there's also interoperability guidance that we started to build up to things like the SDGs, to things like reporting frameworks. At the moment, the main one that we have is the European one, ESRS, but that is the logic in which we're also evolving this material to drive interoperability with a number of reporting and disclosure frameworks globally, so that this work can be leveraged and plugged into your compliance and regulatory requirements. I believe that's almost it. Just to top up that point on interoperability, again, different frameworks will have a slightly different focus in terms of that impact and financial materiality. But given that link between risk and impact, the way that some of these resources are established, they would enable you to feed into a framework regardless of whether it is double materiality or pure financial materiality related. As soon as there is a request for you to consider your sustainability risks and your sustainability outlook generally, these resources should provide an input and some support to the process. And with that, I believe I'm handing it back to you, Umang. Thank you so much for your attention.
Thank you so much, Kareen. If you have any questions for Kareen or any other speaker, please feel free to write them in the chat. We will take all the questions at the end. So for the next session, it's my pleasure to welcome Anujan from Golem Bank. Anujan, over to you.
Thank you, Aman, for the introduction. Hello, everyone. If you can put up this slide, Aman, that would be great. Hello, everyone. Thank you so much for giving Golem Bank an opportunity to share our experience in terms of impact management. So my name is Anuja. I'm the head of the Sustainable Finance Department within the bank. So I'm here today to share our experience in terms of utilizing the impact analysis tool. So before diving into that, I would like to kindly, apologies, I'll put my video on. I totally forgot. I'll give you a brief introduction of the bank. So Golem Bank is the second largest bank in terms of total assets. We do provide services to almost 37% of the population in Mongolia. So we are very much expanding into internationally as well by issuing bonds and other financial instruments on the international market. If you can just go on to the next slide. So I'm not going to go into details on that. I think I will just dive into the UNEP-FI PRB portion. So next slide, please. So okay, so Golem Bank has been one of the founding members as well as a signatory of the UNEP-FI PRB since 2019. It has been almost over 6 years now. During that time, we have been really getting a big jump in terms of integrating sustainability into the business strategy of the bank. Next slide, please. So as I mentioned previously, we as a signatory of the PRB, we have been utilizing the impact analysis tool that has been provided by the UNEP-FI for the first time back in 2021, covering our portfolio, retail, SME, and corporate segment portfolios, and that's where we actually managed to identify the most negative areas with the most negative impacts. It has been, and we have identified 2 areas based on our analysis results. And since then, we have been utilizing the tool on a yearly basis. In 2022 and 2024, we have been we haven't seen a big change in our portfolio composition, so we haven't utilized the tool completely. But in 2023 portfolio, we have utilized the tool to double check whether the first analysis results are still valid. So that's where we are. And I think Karine also mentioned that if you don't have any significant change in your portfolio composition or in your business strategy, I think it's pretty valid from our experience, it's pretty valid to conduct the impact analysis on a 2-year basis. So if you can go to the next slide, Iman. Thank you so much. So just to give you, I think, give you an overview on the challenges and opportunities that the bank has obtained from our experience in terms of utilizing the impact analysis tool. So the first and foremost, it's very basic, but it's really important. I think Karine was also mentioning that the UNEP-FI has a pool of resources that can be, can be read by the signatories. So it's very much useful to get familiar with what kind of tool it is and what kind of information is needed, especially how you can read the results. Because as Karine was mentioning, the tool itself gives a lot of results at the end of the analysis, and they are very useful. But if you can't read it, make sense of it very carefully, you might be able to miss certain important points. So first of all, please, from our experience, it was really important to read all the guidances to get familiar with the tool and how to input your information, what kind of information is needed to be inputted, as well as how to interpret the results. Also, I would like to mention here that for our bank's experience, it was the sustainable finance department that has been using this tool, really inputting the information in it and getting the results, analyzing the results, and disseminating the needed information to other divisions. However, we have realized that bringing on other departments and teams on board from the beginning was really important. For example, get your credit team on board, get your risk management team on board, get your sales team involved as well if needed. So that's the holistic cooperative approach is really, we have seen it to be really crucial to move forward, with the implementation, with the strategies, etc. So that was the second, I wouldn't say challenge, but something that should be noted as well for utilizing this tool. And also, I would like to say that the data is really important, right? I know the portfolio data is out there, it's available for every bank, but when you input it by product type, by vulnerable groups or by economic sectors or sector exposures, you really have to make sure that those data are grouped correctly. So if not, you might go back and redo it again because the results might be influenced by that. So we have actually experienced this when we have conducted it for the first time. So we had to redo it second time to get the results correctly. So that's really a very crucial point as well. Just on the opportunity side, I mean, as Karine was mentioning, it's a very holistic framework to holistic view on your portfolio impact, right? So it gives you the chance to identify where your bank should focus and where your bank should allocate more human resources, more, I don't know, financial resources, right, going forward. So it gives you really the starting point, I mean, backbone to build your sustainability journey, your decarbonization strategy, or, you know, in that sense. So I think without this impact analysis tool and the team of UNEP-FI team here, the bank wouldn't be able to start correctly, right? It gives you the right starting point. So that's really, really valuable. And actually it saves a lot of time for the bank as well to identify your focus areas, focus topics moving forward. Also, it gives you a really good jumpstart compared to your peer banks. For our bank here in Mongolia, for example, we are the only signatory from the country. We are very proud of it. So we also trying to get other banks on board as well, and we're working on it. However, talking to other banks, sharing our experiences, it seems like being a member of the UNEP-FI PRB is something that's really crucial. It gives you the backbone, it gives you the structure, it gives you the direction, you know. Every single year you analyze yourself and you kind of get it out to the UNEP-FI team. They give you the feedback, so you improve it. You see improvements on a year-to-year basis. So I think that's really, really valuable for the banks as well. And definitely last 2 points, a lot of the UNEP-FI team, they have a lot of experts, and if you have any issues or, you know, you're just stuck there, don't know where to go, how to approach certain aspects, you know, the team is always there. So they're always there to support you, to guide you, to help you. And you can request and jump on a call with them and, you know, kind of get a clear idea where you should go, how you should approach certain issues. So that's very valuable for the bank as a signatory as well. And the last point I would like to mention is the resources that the UNEP-FI has. Those are very, very useful because there are a lot of resources out there, and it's, you know, when there are too many things, you don't know where to focus and what to utilize. So I think the UNEP-FI team gives you the clear guidances, the guidebooks, the resources, the publications they have, and those are very, very valuable for the banks who are becoming signatories and who are signatories as well. I think let's go to the next slide. Oh, okay, so that would be it from my side. Very brief, but if you have any questions, please do not hesitate to ask me. I can dive into the details even more if needed. So thank you so much for all of your attention.
Thank you so much, Anujan. That was very, very helpful. Over to you, Soumya, for the next session.
Yes, Umang, I'll just play the video.
Yeah. For the next session, we have Valerie from Chartered Bankers Institute. Unfortunately, she couldn't join us today online, so we have a recording from her.
Is the screen visible?
Yeah, it's visible.
Good afternoon. My name is Valerie Gorkin. I'm the Global Business Partner at the Chartered Banker Institute. And I'm delighted to be able to contribute to today's webinar, Getting Started with Impact Management for Indian Banks. I'm going to tell you a little bit about the Principles for Responsible Banking Academy, show you the range of courses available, but with a focus today on the course Impact
Soumya, the audio is not coming.
It is recognized that this needs to be a collective effort.
Audible? Was it audible now, Uma?
Perfectly fine. Thank you so much.
Thanks.
Needing the support and promotion by policymakers, central banks, regulators, international organizations, such as UNEP-FI, and financial institutions. Bankers do not need to become specialized and technical sustainability experts. Instead, the focus should be on leveraging banking expertise to facilitate the transition towards a climate resilient and sustainable world. The PRB Academy is a global training platform designed to help banking professionals, from frontline staff to executives, embed sustainable practices into their operations and decision making. There are a range of programs available, from entry level, for example, the course Getting Started in Responsible Banking, which provides a comprehensive introduction and overview of the PRB goals, through to more specialist courses focusing on specific topic areas, such as helping clients align with PRB principles and applying nature responsible banking, to a course designed for board members and executives in helping to instill a culture of responsible banking through strategic implementation. So today's session focuses on the course Impact Management for Banks, Impact Analysis. In the context of sustainability and responsible business conduct, impact refers to the effects that an organization's activities have on people and the natural environment. These effects can take many forms. They may be positive or negative, intended or unintended, and they can occur either directly through the organization's own operations or indirectly through its value chain, financing decisions, or relationships. Recognizing and understanding these impacts is essential. It enables organizations to better understand their risks and opportunities and to take responsibility for their role in society and the environment, and lays the foundation for more informed decision-making that supports long-term value creation and contributes to sustainable development. This course helps banks align under Principle 2 of the Principles of Responsible Banking, impact and target setting. Specifically, the first step within Principle 2, analysing the bank's impacts so that targets may be drawn up to help promote positive impacts while reducing negative impacts to people and the environment, resulting from the bank's activities, products, and services. The course comprises of 2 sessions, impact analysis and target setting and monitoring. This course will focus primarily on the initial steps, defining scope, identifying impacts, and measuring performance, laying the groundwork for effective implementation. The second course then provides a more in-depth exploration of target setting. In all cases, the courses focus on practical application and applying the learning to your own scenario and how this protocol can be applied in real-world banking contexts. The course aims to provide a comprehensive and foundational understanding. No prior knowledge is required. It is designed to equip participants with the knowledge and tools needed to identify, assess, and manage the impacts of banking activities from a responsible and sustainable perspective. Covering key concepts, frameworks such as the Principles for Responsible Banking and the UNEP-FI Impact Protocol, the course prepares you to implement effective impact management processes and align banking strategies with stakeholder expectations and sustainability goals. There are 4 primary learning objectives. By the end of the program, you should have gained a foundational understanding of impact management, have a working knowledge of the PRBs, be familiar with and able to practically apply the UNEP-FI impact protocol, and be able to identify practical steps to apply the protocol to your own bank scenario. This is outlined in a little more detail on the next slide. With a brief look at the course content, it first provides a general introduction to impact management, introducing key definitions and concepts, and very importantly, the role that banks can play. It moves into looking at impact management analysis as part of the PRB framework and the importance of taking a holistic view of the impacts of bank activities. It provides an in-depth look at the UNEP-FI's impact protocol and the 5 steps involved, namely scoping, impact identification, performance measurement and assessment, target setting, and monitoring progress. Finally, the course prepares you to take practical steps toward implementing impact management processes in your institutions. You will receive step-by-step guidance tailored specifically to different bank profiles. This outcome is about translating knowledge into action and preparing you to contribute to meaningful change within your organizations. The course can be delivered within class, so course materials, including full trainer notes, are available so that it can be delivered in-house by your own trainers or subject matter experts, or the course can be studied online. The classroom delivery packs are available now, and the e-learning will be launched in 2026. The e-learning is 5 hours long, in addition to the classroom training, which is also 5 hours long. And it's a highly interactive course with knowledge check questions, activities, videos, further reading, case studies, all designed to help you absorb the information. On completion of the course, you will be issued with an e-badge, which can be embedded into your email signatures or your social media profiles, demonstrating your expertise in this knowledge to your customers and clients and colleagues alike. For more information on this course or any of the PRB Academy courses, please do visit our website, prbacademy.com, and please do feel free to reach out to me directly if you have any queries at all at valerie@charteredbanker.com. We'll be delighted to hear from you. Thank you.
Thank you so much. Thank you so much, Soumya, for playing the recording. And thank you so much, Valerie, for your inputs. Now, I would like to welcome Giles to do the closing. But just before that, I see that one of the attendees has their hands up. So, Gangadharan, Mr. Gangadharan, do you have a question? I think so not.
So I think it's not. I think it's done by mistake.
No worries, no worries. Thank you so much, Soumya. I also see that there are no questions in the question and answer panel. While Giles, while he does his closing, in case you have any more questions for any of the speakers, please feel free to add them in the question and answer panel. Giles, over to you.
Umang?
Yes.
There is one participant who has just raised their hand.
Yeah. Samantha. Yeah. Samantha, please go ahead.
Just 1 second. Let me. Yes, Samantha, you can speak. Samantha? Samantha, you can speak.
Can you hear me?
Yeah.
Yeah. Good afternoon, all. Actually, my query is that what is the duration of the course and what will be the course fee?
Giles, do you want to take that up?
So the duration of the course is about 4 hours, and we'd like to have a discussion about the course fee with you, depending on your specific bank needs and situation, because there's different ways we can deliver the course, as was mentioned in Valerie's presentation.
Okay. And my second query is that after completion of the course, whether we will get any job assistance from your end?
Get any what, sorry?
So I mean to say, after completion of the course, see if I will complete the course, whether we will get any job assistance?
He's asking whether they will get any job assistance. So there is a certificate that you'll get on completion of this course. That is about.
Okay. 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 I understand. Yeah. Thank you.
It is an educational institution, Mr. Hazarika. So you will get the certificate and you can use the certificate to further your the promotion in the bank or further lateral movement.
Yes, sir. Thank you for that. I know, but still I am asking that question, sir.
Yes, no issue.
Okay. Thank you, sir.
Any other question?
I think everybody's done.
Perfect. Thank you so much, Samir. Over to you, Giles.
Well, thank you very much, everyone, for attending, and thank you particularly, Biswa and the Indian Institute of Banking and Finance for hosting. It's always a pleasure to work with the Indian Institute, the largest, one of the oldest, and certainly one of the most respected banking institutes in the world. It's been a really interesting session today, looking at the scale of the challenge with Maria Taborda, and then Ranjan going into some detail around the GIZ programs and how they're working across India. We then heard from Corinne about how the impact protocol operated, and the significance of the interlinkages that we see, and why a holistic approach is so necessary. And it was really interesting to hear an actual live case study from Golompt Bank to really bring to life everything that's happening in this area. So that was a fascinating session. Really, the message from me is we're here in learning, education and training at UNEP-FI to help engage with our partners on learning projects in whatever way we can. And we have a great relationship with the Indian Institute, and so any opportunities with banks to work in with us in this partnership would be greatly appreciated. So please do contact Umang or Nonita if you have any further questions about any opportunities that may be coming up. But if I could just end by saying thank you very much to all our speakers. It was a great session today, and thank you very much to all our participants for coming, and thank you particularly Umang for organising as well. Thank you.
Thank you so much. Thank you, everyone.
Thank you, Umang, and thank you all the speakers. And good to see Giles here among the speakers, our old friend. And thank you all the participants. We'll keep on giving you more such snippets regarding the climate risk in association with UNEP. Please wait for the next announcement also. Thank you all.